Well, hey, everybody. If you're a trader, I know that you've been in a place where people have either given alerts or you're a part of an alert service where you've seen them or you've gotten trade call out. In this video, I want to show you how to analyze those alerts to determine whether it's a good trade that fits your trading plan and one you'd like to enter. All right, let's get into it. If you're looking here, I'm going to use the example of the Peakbot trend spread alerts. These alerts come out every day. Actually, this watch list is available all day long, but I wanted to show you how you can use this list in order to trade spreads as a seller. Looking here at the list, the top one on the list is Taiwan Semiconductors. They give you some information about the premiums, the budget you're going to use. This information isn't necessarily useful to you, but you'll have it, right? So they give you an expiration date and they say sell this put strike is 180 and buy this put strike as 170. Now you can take this as a 1-for-1 and do the 180, 170 put credit spread. That's going to be a 10 spread. It will cost $1,000 for this trade, which is why this budget shows here. But you can also look at this sell strike, determine whether you're okay with this sell strike, and then look at another buy strike in order to place the trade. I'm going to go here to the chart. Let's look at the chart. They've suggested, or the alert says, we should look at the 180 as our sell strike. 180 is down here. All right. This is basically below all of the supports. This is a 30-minute chart. So we're below the supports here. We can even change it to a daily chart so we can confirm whether we agree that that's a good place for support on the daily time frame, right? I'd say yes to the 180. I might even consider going a little bit higher, but if you're going to take the alert, let's utilize what the alert says. But 182.47 looks like it might be a good place too. But let's go with what's been given to us. 180. Now I'm going to go to the option chain and we're going to look, I will put it on single, and I want us to look at the 180 strike. The 180 strike is at a 71% probability out of the money for next week or for the July 19th expiration. It's got a 70% probability out of the money or a 0.26 delta. This is a good safe place for a put credit spread. I do agree with that. Right, so we're going to change this. Now, what the alert gave us was 180 as a spread. I'm going to go ahead and select it, and it gave us 170. It suggested 170 as your buy leg, right? So we had a sell leg of 180, buy leg of 170. This is a 10 spread, so it's going to use $1,000 of collateral, and you would collect $198. Right, that's about a 20% return on the $1,000 of collateral. But what I'm suggesting is if you didn't want to go this wide, if you didn't want to do $1,000 of collateral, you can change this 170 to 177.5. This makes it a 2.5 spread, just like it is on the option chain. So if we look here, the option chain has 180, 177.5. Notice we're on the put credit spread side. If we were to select this under the bid column, because we're sellers, this is going to pay you $68, and you're going to utilize the remainder of that $68 to go all the way up to $250 because this is a 2.5 spread. 2.5 spread, 180 minus 177.5 is 2.5. Multiply that times 100, that's $250 of collateral. And you subtract this 68 cent or the $68 from the 250, and it leaves you with $182, I believe that is what you have for your collateral that you're going to put into the trade. Hey, if you want to elevate your learning of credit spreads, I do have a resource, a training resource for vertical credit spreads. I'll put the link down in the description and you can grab that and be able to go a lot deeper into credit spreads and how they are going to help you to generate nice, consistent profits. All right, check the link in the description. Right? When you like everything that's there, you confirm and send. It tells you your max profit is going to be the 69. Your max loss is 181. This is if the price goes all the way back down or expires below 177.50. How much are you going to pay for the trade? And when you're ready, you push send and it should enter you into the trade. Okay, so now that the order has filled, we can go to the monitor tab and drop down our Taiwan Semiconductors trade. And we see here that it actually filled for $67. It shows mark is the current price of what it is. Okay, so here's another example. Let's look at S. You see here that the same expiration, 7/19, sell the put strike at 72. This alert suggests that you use 65 as the buy put strike. I'm going to show you on the option chain how you can shrink this spread and use less collateral. We were looking at SE. The alert said 72. Let's look at our chart to see if we agree that 72 is a good place for support. You should always look at the chart before you enter a trade. They are suggesting 72, which is right here. I do see that as a good support area. You could even potentially get a little closer in the 73.5, but let's go with the suggestion. The Peakbot alerts, I know, use the delta to help them determine what would be a good strike. And the 72 strike has a 29 delta. They get that first sell leg around the 30 delta. So you can kind of trust that also on when you see these alerts, but I want you to look at the chart to make sure that you agree, right? Okay, so we got 72. They suggested 72 and 67. We're going to just look at it as 72, 71, 71, 72. 71.72 is going to give you a credit of $24, and you're only going to utilize the other $76 for collateral. If you widen the spread, that puts more collateral on the table. So if you do just the one spread based on the sell leg that they give you, because they suggested 72 as the sell strike, then you pick the one down in strikes or two down, whatever you're comfortable with, but one down is really sufficient. And then that is the trade you can do as a spread. Okay, I'm going to say confirm and send. It says max profit is $24, max loss is $76. How much it's going to cost to enter this trade. And when you like it, you push send. All right. Okay, so I've just showed you two examples of how to use the Peakbot alerts for entering trades and not using a whole lot of collateral. All right. Be sure to like and subscribe.